What is going on, everyone, and welcome into the channel. Today we're going to be diving into some of the top stocks that we're looking forward to this coming week in early June. First week of June last week was pretty nice for a lot of people, and a lot of people had some nice weeks. Market, if we take a look at how it finished up on Friday, looked pretty solid. Solid green day on Friday, but yeah, we're right at those all-time highs. Some resistance up here on that 423 on SPY, but will we see a continuation to all-time highs into the coming week? Looks like it might be setting up for something along those lines this week. We've been seeing a lot of action. There is a suspicion that I think we may not, depending on how AMC does. I'm thinking if AMC goes nuts, the market may pull back. As who knows? We kind of saw that happen. That was kind of a correlation with GME, GameStop back a while ago. We really want to dive into AMC a little bit too in this video. I just want to put at least my thoughts on, in terms of what I think for AMC, in terms of really just why I'm in, because it's not something I would traditionally trade, right? Trader, right? Mindset or trader approach. But it's definitely something that a lot of people are going to be focusing on this week. So we'll start with that. I think that's a good idea to start with that. And for those who are jumping in after the fact, if they don't want to talk about that, because we don't generally, it's not really like a focus of the channel, right? But it's certainly news that we got to dive into. So after that, we'll dive into a bunch of stocks we're looking forward to, try to keep it as short as possible, condensed, about an hour long or so, and then we should be able to be getting in and getting out with what we got to do, and we'll be good to go. So there's the market right there. Futures as we're speaking, let's pull it up. Futures are like barely green, not much movement yet as of right now, is what it is. But let's dive into AMC. I do want to put that out because I want to talk about at least my thoughts on AMC going into this week. Everyone's going to be talking about it, so I figure why not. Now, chart-wise, in just crazy extension, but higher lows. Right? What we've seen on the daily chart, we're seeing higher lows. And pretty consistent, right? We had this on Wednesday. Our low of the day was at 35. On Thursday, low of the day was at 37. And then Friday, 46. So yeah, well, the past 2 days have been technically red days. If we look at the 5-minute chart on AMC, after hitting up, if we look back, after hitting up over 77 in pre-market on the 3rd, that was a Thursday morning. The past couple days have been kind of down, but we've been holding up higher lows, which is kind of interesting. So yeah, we did dip below in the aftermarket hours on Friday a little bit, and then kind of rebounded just a little bit, but down 8% in the after hours, somewhat substantial. But again, nothing, too crazy. We have this little channel we drew in here. We can get rid of that for right now. But here's my thoughts on this thing. So right now, what we're seeing, and I'm just seeing more and more on social media, it's getting a lot of media attention. CNBC last week was all over it. I was, with the gym, and I would see it on CNBC all the time. And I'm seeing more people who are finally like, it was fun. Well, weeks ago and even months ago, the first round, it was a lot of fun to be on the GameStops and the AMCs and stuff. And it was like, okay, first go around, right? But the thing is, I think people now realize that there's 100% or a lot more focus on specifically AMC. This is going to create a lot of opportunities for trades outside of AMC for like BlackBerry. There was even like Bed Bath & Beyond for like costs. All of those like meme stocks, even SNDL, GameStop, all those type of stocks will probably get some attention, right? Because they were really hot back the first go around. But I have to say I've seen a lot more focus on AMC, and I think that this isn't going to end anytime soon. I don't think it's going to just kind of peter out and everyone's going to kind of give up and AMC falls back 25. Given the substantial, we've seen news in the press and all that stuff, I think this is probably going to go higher. Again, who knows? It can go obviously lower, and those who are, deep into AMC, and super emotional about it, you're going to get pissed, but it is what it is. But if it I have money in it because I think that it's super strong, and I think that we're going to see a continuation of a squeeze. And there's a lot of funny business going on with the naked shorting and the fake kind of making it seem like there's more shares available to trade for AMC so that the amount short isn't as big. Meanwhile, there's still shorts. And I was saying in prior videos that there's a lot of people who've been shorting the stock and, are in and out, and that are not going to be stupid enough to continue to hold. Yes and no. There are also definitely, I want to point out, there's definitely people who are shorting AMC, hedge funds and whatever, who have not gotten out of their position, have not covered. And some people are like, well, let's blow them up. And yes, that makes sense. But at the same time, this would really have to go. This would have to go to probably like $10,000 in my estimate, in my guess, for them to really, really hurt if they're going to be stubborn enough to continue. Why is that? I'll give you a perfect example of how I did it, and I got stuck in a short, and this was kind of the signal to me to stop doing this. I still will short intraday, for just small plays, but mostly now I'm mostly long biased on day trades, and I don't really swing short anything. But it was PIRS. I started shorting PIRS here because I didn't see that it had much momentum. So I started shorting it actually, if you look back on the 25th, a little bit after it kind of bounced off the bottom once the market opened, because I felt like there wasn't much volume and it would fall off. And it ended up pushing up and holding VWAP and pushing up nicely the rest of the day. What ended up happening was there were no more shares available to short, so I kind of got stuck in that short. I was like, I'm not going to take a loss in this thing. It'll probably come back down, and it certainly has come back down quite a bit from where it was. So what I ended up doing the next day was I was able to get more shares the next morning, and I brought my average up significantly. So I had an average at like 275 was my average on my short. And then because I wasn't in big. I wasn't like these shorts. I don't go in big on a short because I know the risk, right? And this thing, what if a stock goes 1,000%? I don't want to get blown up, margin called, right? So I go small, and I'm not looking for crazy gains, but my anticipation here is this thing would pull back because of the news, and when I looked into deeper in the company, I felt it would pull back. And so I was like, okay, let me just double up my position, which I did the next day, or roughly double it up. Maybe I added I think I had a couple hundred shares short, maybe I added a couple hundred more at the time, which wasn't anything crazy, right? So I was just, nothing, I wasn't trying to blow myself up. And what I did was I added to it around $5. Then it brought my average up to about 317, I believe, was my average on PIRS. And guess what happened? I put a good till cancel order at $3.01. And guess what happened? We hit $3 right here. I woke up that morning, taken out. It filled me, and I ended up going green. So I made about 16 cents on my, I think it was almost 1,000 shares at the time, of PIRS, right? Which was nothing, no crazy short because I knew the risk, right? But I think there's a lot of funds in that same position with AMC, where they're like, hey, you know what? Once we kind of realize the dust is settling, there's less attention, this starts to die out, and maybe they're feeling that right now. Maybe they added to it this past week. Who knows, right? We'll add to our position. Let's say they were shorting it from like $10. We'll double down. We'll triple down on our position because we're not in that big. We have unlimited funding, unlimited money. We'll do that. Boom, we snag that money, and all of a sudden our average, next thing you know, is at $35. Give it 2 weeks, 3 weeks, 4 weeks after things start fading out. AMC comes down to 25, cover it, or maybe it comes down to 20 or even lower, and they cover their short. That's their thought process. I'm thinking on the stubborn shorts who will still hold through this. I think it's stupid, but at the same time, there will be some that hold through this. And so I think if it has to go 100 plus, 200 plus, really to get them really kind of sweating or force them to cover. But at the end of the day, they have unlimited funding, right, as where we don't. We saw what happened with some of these funds, how they got bailed out billions and billions of dollars, how Robinhood and how a lot of the brokers shut down trading, which there was reasons why, right, too crazy volatility and active, all that stuff, which is not to be confused with volatility halts. Like if the stock is too volatile in a specific period of time, like for example, like AMC, right, could get halted, right, on the exchange that it trades on, right? So it's not just like, oh my gosh, like Robinhood stopped trading. No, this happens all the time with a lot of volatile stocks. That's kind of my thought. I think we go $100 plus, I'm thinking. But we'll see. Maybe it takes longer, but I'm seeing more people with more attention on it, and I just don't think it's going to fade out. And I think there's a lot more focus this time on this, and people realize, hey, if we focus, like GameStop was cool, but if we focus in and there's no kind of BS with the brokerages and stuff, I think that it probably can go crazy. If enough people start snagging shares and they don't actually sell, you're going to have your scalpers, your traders. There's always opportunity, but there's going to be, there could be a significant run. So that's at least my thoughts, right? We'll see what happens. Appreciate you guys for tuning in. Hit that thumbs up button. I'm going to keep this to about, let's say, like an hour. So like 9-10 minutes in. So we'll keep it as short and sweet as possible so we can get in and get out. This week we go live also on Wednesday mornings. When we go live Wednesday mornings, we live trade. So if you miss it when we go live Wednesday morning, watch it Wednesday night. Watch it the next day. It's fun. I try to go live for at least an hour. Sometimes when there's more action. I think this past week we did like almost 2 hours. Because we were in a couple things and it was fun. I think Bctx talking through stocks that I'm in, what I'm looking for day trade wise. It's fun. It's fun to talk through. So stay tuned for that. So future right now, pretty much even. Nothing really crazy to talk about. VIX is a little bit down, which is would be, I guess, a good thing. I also want to point out SVXY. So I mentioned if you were to go back on the community tab on the channel, right? I mentioned SVXY a couple times in the past, or maybe once or twice now. And what happens is that if we see significant volatility, what happens with this guy? It spikes down. So SVXY is essentially the inverse of the VIX, right? In a sense. So if this volatility goes up, VIX goes up, this goes down. So this is an opportunity that you can take advantage of the trade. And I said, hey guys, if you're looking at this one for a couple of days to a couple of weeks, you know, on those super volatile times, you had two opportunities where you could have traded this thing, you know, from sub 50 to up to like $50, and now we're at 53 almost. So this opportunity right here, now I obviously understand you're not going to get the bottom, right? No one's going to get the bottom, but this opportunity from the bottom to kind of the rebound zone right here, you had roughly like 14% gains. And then from the latest dip, from the bottom up to where we are now, you're looking at 18% gains. So it's not like a massive penny stock, like 100% play like I had like on Bctx this week, like a swing I like to do, but you can size in a lot heavier here. And you at least know, you kind of have a good feeling saying, hey, if volatility spikes, a way to short the VIX, which has been a consistent proven strategy, right, over time, that volatility comes and goes. Now, obviously, if we go into a prolonged period of uncertainty, right, we go into a prolonged period of the markets pulling back, that could change. But we look back through history, and more likely than not, you're putting yourself in a much better risk reward here if you're buying SVXY on these hard spikes down. Now, understand also what's going on news-wise. If you're buying this thing and it has not confirmed kind of a bottom, and how do you confirm a bottom? Well, you kind of look at it right here, and you kind of see that we stop just going straight down, and we start having a bunch of these wicks that kind of pull back, and we're holding up. We're not just continuing a downtrend. When you start seeing a reversal off the bottom, usually, you know, a couple can, depending on what time frame we're looking at the 1 hour chart right here, we can probably zoom in to get a better view on a shorter time frame. But when you start seeing a couple candles holding up and reversing, right, generally that's a better sign to start grabbing something there. Or you could just simply go at it with the intention of, hey, I'm buying it, I don't care, it goes down, I'll buy more, right? Kind of like a stock. If you're looking at like a long-term thesis on a stock, and your long-term thesis here is I'm shorting the VIX, right? I'm playing the inverse of volatility. So that's the intention, that's the idea behind it. But it's worked out pretty well past couple times. So it's been a good opportunity, good idea. And that's at least my thoughts on that. It's back to a spot I wouldn't be buying it now, but it's back to a spot where, hey, you know, you could be locking in gains if you had bought it the past couple weeks. And if you sized in heavy, right, 10, 20%, it's pretty good. I can't complain. So let's take a peek at some stocks here. ZVO. This is looking interesting here. We take a look. I'm gonna look at the daily charts on these bad boys. So we look at this. We got a gap here, very similar to this. Is what I think we're seeing in a lot of penny stocks. Bottomed out plays are starting to really kind of curl off bottoms, and it's giving me those like December, January kind of vibes that we had right from the back at the beginning of this year, end of 2020. It's giving me some good vibes. We'll see what happens. My concern though is that we're not going to see the crazy run we saw back then to start 2021, just because I think we're going into the summer and it's generally a lighter period now. Because it is a lighter period, the reverse psychology behind that could make it a crazy period, right? We can think about it that way. I think, oh well, everyone's expecting it to be light. It's where the hammer drops and there's crazy runners every day. So I don't know. We'll see what happens, but this is looking like a pretty good shot. I think this is a decent play up to like 315. I'll even throw it on a watch list too, because I want to take a peek at it a little bit further myself. But it's got range. I mean, obviously it would have been a nice buy down here if you were able to snag it in the low twos, right? But we got going to be some resistance up here around $3.20, $3.25. So that's a gap fill right there. So I think that's a pretty good spot for a first price target. We have a line right here at like $4. So over that, I would look towards probably $4. And we got prior history. We got these prior spikes to the upside. So I can't say that looks pretty bad. It looks pretty good to me. Do you regularly trade options on these penny stocks? No, I definitely don't. What I have been doing on longer term plays. So example, VISL. They have, I believe, this chart looks, I haven't even looked at the daily on this. This looks really nice. Very nice breakout of the downtrend here on the daily chart. We're looking for probably a clean shot to $3 is coming on VISL very soon. Maybe this week, maybe next week, who knows. But this is like a longer dated play for me. So I am looking to scale out very slow on this one. But how am I going to do that? How am I primarily scaling out now is what I'm doing is I'm actually selling covered calls. So instead of buying calls, like I could buy calls. The problem is that what if we go into a period of time this summer and all of a sudden, pennies go quiet? I still want to have my positions because I still feel like there's value there, and I'm also watching them, so they give me opportunities for scalps. For example, like if VISL comes down to $2, I know $2 as I've watched this stock. I know $2 unless there's underlying news, right, that's driving it down. I know $2 is a pretty solid support. If it goes to 2, I'll buy it towards 2, and I know I can probably get a good scalp out of that either intraday or within the next like week or two for a nice bounce back. So I'd feel very confident going heavy on VISL at $2 and then setting some sells like 210, 215, 225, and I know at least I'll be able to scalp it for that range. So even if the market slows down, things really pull back again, kind of like we saw the past couple months from like the end of February through like, end of May. If that happens, I still want to hold my swings, but what I'm also doing is selling covered calls. So I'm selling on VISL. I'm selling calls out into the future. So I'm selling Junes, I'm selling Julys, I believe even Septembers. Maybe just a lot Julys. So what I have is I'll pull up options on this really quick. Let me go to widgets, pull up the option chain and stick it in here. Okay, so VISL, I know it's going to be small. I'm just going to pull up some numbers. So for example, I have some June 18th 250s. Now, essentially what this is going to do is I got paid like 25 cents, so $25 per contract. I only did one contract just to kind of mess around, just to make $25. I was like, that's whatever. But I got paid $25 on this to sell it, to essentially put a limit sell at 250. So VISL going into June 18th, if it's over 250, I'm going to get taken out. Now what ends up happening was I get my shares taken out at 250, but I still kept that credit that I got to sell that contract. So if I got paid $25, realistically, if VISL is under 275, technically I'm making money on that. Like selling that contract, selling that covered call was better than just putting like a limit sell at like, 250 or 275, right? So we'll see. But that's how I'm doing it. And so what I actually have more of if I have $5 covered calls that I sold. Now, those are cheap now. So I think I sold them for July. Or no, maybe I think those expired already actually in May. But I'm looking to see if the ISL gets it going. I'm looking out for July, for October maybe. Those are contracts I'm looking at. Not right now, but if the ISL gets a pop and it pops up to like, let's say like $3 this week and it's super green, these contracts are going to have a little more juice behind them. So maybe I'll look out to July's or I'll look out to October, right? And I'll sell a bunch of $5, covered calls. And if those $5 covered calls are trading for like 50 cents or like 55 cents, maybe, if they are, right, that's going to pay me $50 per contract. And I have I forget how many shares I have over. I think I have over 1,000 shares of it for right now. I want to add to that as my account grows. I want to add to my solid swings on dips, right? Then what I could do is immediately sell covered calls and get paid a couple $100 to essentially put a price or cap me out at $5, which is fine for maybe like half my shares, which would still be like a double from here. So I'm like, hey, that's fine with me, man. $5 is up here. Look at $5. Like $5 is up towards these highs that we saw back at the beginning of the year, right? If it gets there, hey, take me out, please. Take me out, lock in my gains. But if it doesn't, or if it comes up, touches 5, and then bounces and falls back to the downside, and I never get those contracts expired, I got paid a couple $100 to do that, and then I can lock in my shares where I want to lock them in, and that's how I see them. So that's in terms of the options. That's what I'll do for options generally on longer term holds or longer term outlooks. Like they got like 5 product launches coming this year, and with more sporting events happening, they're going to be at more events and stuff. So I like this one as a longer term play, kind of like even like a reopening in a sense play as well. It's got a lot of things. They got some cash sitting nicely with cash. So I feel pretty good about it. But at the end of the day, this is not a stock. It could certainly spike in one day with some crazy news, partnership or buyout. Who knows, right? That could always happen. And I might consider selling it all in one day there if it goes up like 100% in one day. But for the most part, I'm not expecting the stock to go up more than like 10, 20% in a day, even if with good news. Unless the news is super, super hot. So I'm looking to kind of trim and rebuy on the way up. Stop loss, take profit on Webull. I'll pull up my like actual trading like window we can actually do. So for example, like AMC pull up right here, what you can do is it's probably best to show you during like live. We've done it on live tradings. But for example, if I was to go in with like, let's say 100 shares of AMC, I could actually do it's kind of cool. I can set like a bracket order. So I can click on the stop loss and take profits on a limit order. So I have the limit order selected right here for my whatever amount of shares. I can put my limit price in, and then I can put a stop loss and a take profit immediately. immediately there, and I can adjust those numbers. And then what's going to happen is that limit order is going to execute just like a limit buy order would normally, but that limit order will execute. So let's say, for example, like AMC, this limit order is set to 43.72. Let's say I click on buy right now and it fills me. It's immediately going to put my stop loss in place and my take profit in place. And then what I can do, what I've done on, I think I'm on some streams as well, is I'll just bring up my stop or adjust my my take profit or limit order to the upside as the stock progresses, right, up or down. So generally what I'll do is, like, let's say AMC right here, I'm looking for a trade and I buy it at 43.72. Maybe I want to put a stop loss at like 39.97. So if it drops below $40, I'm out. But I'm looking to take profits up towards like $50. This way my risk reward makes sense. I'm going to risk about $3-4 down for, about $6+ up. That makes sense to me, and that's the type of risk reward that I would want to have. So it's really fun. It's really kind of fun to do. And what I'm going to do though as well is that all this stuff, Weeble's done a lot of updates on their platform, desktop, mobile. I have another, it should be linked here, or if it's not linked in this description, check out the description of my last video. TC Trading, or just look up the channel TC Trading. That's just like 100% a tutorial channel. Like I'm literally just doing like this type of stuff, explaining that type of stuff, doing it live. Like that's where I'm going to put videos like that, because they're kind of more niche videos and they're more like searchable videos. And so I know people who are like, come to their channel, a lot of them don't want to see that because they either know how to do it or they just don't care. They want to see something else. So that's why I'm just separating that content into a different channel. I know it's super helpful. It's fun for me to kind of dive into this stuff. And I know it helps people. So that's what I'm putting, like tutorial style stuff going forward from now on. I have a lot of stuff on the channel already, but that's probably that's going to be the spot to be. TC Trading is the channel. So we're building it up. EVFM's funny. They just got a buy, I believe, from Morgan Stanley. So they popped up in the after hours. That's why they got a pretty significant buy, a 13G, I believe, filed on Friday from Morgan Stanley. So this one's an interesting one. Here's a problem with EVFM. The big issue that I have with them, and let me get rid of this, is that their management is horrible. So there's a lot of things that you can look at with stocks, and management is something that a lot of people overlook because they don't think about, the management side of things and like how, good management really matters. And the way that the CEO handled things, actually, if we go back, it was back in here. It made a crazy run, and I was in it for a part of that run. But back in here, they launched their product, and their product comes out. Now, of course, the product ends up doing well long term. Doesn't really matter. Management's important, but like it won't matter as much. But product comes out, and it was a perfect example of a sell the news. Stock falls back off. Next thing you know, it's trading like $2, like a week later, not even. From being up towards like 4. So like it gets cut in half off of nothing, but the CEO sold shares. The CEO had to file that, and the CEO sold shares, and it was a horrible timing for that, right? But apparently it was to buy her parents a house or something like that. So like, okay, cool, but like could maybe have done it at a different time? I don't know. And so that's what happened. And management just hasn't been great. And so that's the negative on EVFM. But that said, it's a bottom play. I mean, it is a bottom play. It's a penny. It's now a penny. It's a sub $1 stock. It's a different category of stocks now. So it's definitely worth a shot. I mean, they have a gap to fill up here towards like 115, 115. Kind of like it. I don't like buying it like right after the spike we had in the after hours. Let's take a look what we got. Yeah, so we have the spike in the after hours. It popped at 98 cents. And then it kind of finished up like 94. Maybe it pops over $1 come Monday morning, tomorrow morning. But I don't know. I think longer term, if this thing does dip down a little bit lower, back down towards like that 75 area. I mean, I'm not sure if it's going to go to 75 again. But if it gets down below 90 cents again, I think it's probably worth a shot to grab something. I liked it. I liked it back in the day, and I've traded it a couple times for profit. It's just that the CEO and the management is not the best, which is, it's important, right? And you need to have a good management, right, for this to kind of this machine, to kind of work. And especially with penny stocks, really you're fighting a massive uphill battle, and if you need everything kind of working your way if you want things to turn, if you want to become where you want to make it out of this stage. And it looked like it was for a period of time, but we'll see how this plays out. Step-by-step process, day swing. So I have a video, how to trade penny stocks 2021. I think that is probably the best place, and I'm going to make those videos like every year, I guess, kind of updates in my style and strategy. I go through day trade, swing trade ideas, and I got a lot of videos already going over on different playlists, a lot of my step-by-step kind of strategy and plans. Risk management playlist, there's a video there talking about how I manage my risk, how I average in. It's good stuff. The thing is, like, I know it's unfortunate, like sometimes it's just like there's people can't find it, but if you take a few minutes to look on the channel, there's probably already a video on a lot of that stuff. But going forward, if I have updates and how I'm doing stuff, I'm certainly going to be talking about it. But generally speaking, for my style, it's buy low, sell high. Okay, sounds stupid, sounds simple, but like I'm playing bottoms. I'm not like when you can say buy low on like EVFM back here in March. Now that was great, but it has gone much lower. I'm looking for like this type of stuff, bottomed out, post offering, right? Stocks really sold off. It's finding support here. You look back to the left, it's at a low, or it's back down towards support that it was at months ago, and it's setting up. So for example, I think CLEU was one. That is like one that I'm not in it, but I might look at it this week and see if I get in it this week, because it's an example of like, look at the stock. It has that prior history of spikes. It's a low float stock. It's down here at the bottom, down towards support, right? I'd be happy to buy this stock down here, cutting my, risk here down towards like $3. But even that, I kind of know how these things work, and I wouldn't be, opposed to even adding this thing under 3, unless there's some underlying news. Looking for a spike, looking for one of these pops, and usually you can get some of that volatility on this guy. This is kind of one of the stocks you can trade in a range roughly, right? Where you can probably from if you're buying towards the low of the day, generally on a given day, you can set your sell maybe for like 5-10% higher, for example. Like 5, I would say like 5 to 8% higher from where you're buying in. Just set a good till canceled sell, and maybe the next day or the next day after that it hits. Like this is one of those kind of range stocks, and then eventually you get one of those breakouts of the range. Either there's news or people just catch on as a China low float runner. It's a Chinese education stock, so generally like that, there's any news out of China from virus wise or whatever, they might pop. These things might pop, or just if another sympathy play is running. For example, WAFU, AMBO. There's a couple of those China education stocks that this stock gets going. So this is one of those. That's kind of generally how I play it. I play these stocks that I've either traded before, or they're new stocks to me, and they're down towards bottoms. Bctx was a beast, and it was a fun one because it was fairly new, but I was buying this thing down here, right? I was buying it down towards 3. I had a low 3 average, and I was looking at it saying, hey, this stock hasn't had the spike. It hasn't had, on its trading history, it hasn't had the spike. They haven't dropped some really fire news, and the stock hasn't gone. Generally speaking, with a lot of these penny plays, these super low float stocks, super small market cap stocks, they do that at some point, and they did, and then the thing went 100%. So that was fun. That's like the basis of my swings, and it's not every day is going to hit, right? You can be in swings for a while, just waiting patiently. But if you're patient on something and you've done your due diligence and you like to play, and things are still setting up, hey, if you're patient on it, generally speaking, you get a pop. It's just more often than not, people get freaked out of a stock dropping down towards support, or the market kind of panics. You get a panic sell day, or you're just not patient enough to hold it. Like there are people who are maybe in BCTX because somebody else told them to get in, and they sold it, because like, yeah, this is taking too long. I don't care. I don't know what's going to happen. But if you have an idea of what's going to happen and you have a thesis for the trade, I was playing this one for news. Now, if it went on no news to like $5-6, yeah, I'm probably going to take most of my profits on the table and then look to rebuy. But because they got that news, I was like, hey, I'm selling into this news, but I was looking for that. I did looking for that news, as they had hired some PR firms. They're like, it's coming at some point. So matter of time. Jagx, FAMI. I'm in FAMI, FAMI, but Jagx I'm not. This one, I think I've day traded it a couple times. Yeah, I would have liked it lower. Ideally, yeah, looking back, hindsight's 2020, I would have loved it down towards like sub 150. $2 resistance for now, but I think it probably can get up to $3. 260's next resistance, I would say, on it, but it probably has a shot to 3 if it spikes. This is a popular one back in the day. It was really popular back when December, early 2021 hit. So I'm expecting a lot of these stocks that were popular back then to heat up again and make some decent runs. Another one people were talking about, I'll pull up FAMI really quick. I like this one a lot because I've been buying it. It has a gap to fill. It's a shroom play, psychedelic play. I like this one a lot, and it's bottomed out post offering, and I'm looking for targets up to over like 75 first, which is a significant upside from the current levels. But it is something that I'll be buying dips on. I actually bought some and scaled some out on Friday. We get a further dip sub 50 again, I'll buy some more. Like if we get like a 47, 46, yeah, I'll buy more FAMI. I like it a lot though. Biotech, yeah, Biotechs have been on fire. That's where it's at right now. Bctx was nice. I talked about how much I made this yesterday's video, but yeah, I kind of botched the exit a little bit. I wanted more, and we didn't get it, which was fine, but it was fun. That one's like the way that it works out with the way that my swings kind of work is that day trades and stuff that I take now that I'm doing more of, which when things are hot, they're fun. But for day trades, right, I'm looking for, if I can make a couple hundred a day, at least with the account size of 50,000, that's fine. Like, I'm fine with that. But the swings, there's no like, oh yeah, like I'm looking to make 5%. Like I have goals of like roughly 5% a week is like my goal really. Last week was well over 5% on the account, right? I want to be more consistent. I don't want to do 100% in a week and then, lose half the next week. But the swings is where really the money's made. And you just need like, if you think about it, you just need a couple Bctx plays a year to make your year and to just completely blow away the overall market returns. So Bctx, you literally wake up. You could have slept and you had all day to still take profits over 100%, right? 100%. Like, let's say you had, and I don't go in more than 10% of my account into one stock. That's just my style. But even that, right? Let's say you had for example, I don't know how much, I had a couple thousand, I had like 3,500 in it roughly, right? So yeah, I botched the exit a little bit, but you make a couple thousand on that trade on a 50K account, right? That's pretty substantial. Do the math on, how that plays out, as you grow the account and stuff. But that's how I started. I mean, a couple $100 in my account, a play like this hits, I make $100 that day. And it sounds crazy, right? Looking back, that was like 2 years ago, but 2 years ago, when you start off, when you only got like $300 in the account, you have a $100 day. That's a massive day, right? Percentage wise, it's massive. So it's been fun. 41 AMC new bottom. I think I'm curious how tomorrow goes. I think a lot of bag holders in Jagx over 3. Yeah, so it's true. So you're probably going to have significant resistance over 2 on Jagx unless you get some serious news. But AMC wise, I think is going to be a pretty, well, we can talk about that here at the end too, in a little bit. I talked about it at the beginning, but I'll talk about it at the end to like wrap things up. I just think that there's no fighting it. There's no reason to fight it for shorts. I'm not sure I have shares, right? But if you are looking at it short, I mean, what's the point of fighting it right now? There's just no point. Play it, ride it up, play that you have every money. You literally, if the funds wanted to, and they definitely have, they've been going back and forth, I'm sure. But if you wanted to ride it up and really go crazy, you can throw in a couple mil, right, as a fund and make a couple mil just like that for your investors. Now, I guess obviously, right, when you have to report what you're in to investors and stuff, is that going to look good? No. But I don't know. There's that too. There's that aspect of things too. You don't want to say you're in it, but you want to make money on it. So I guess. But I just think there's no fighting it. I think a much more kind of focused effort this time around. Whereas people saw what happened with GameStop, where they're like, hey, if we seriously focus, and these massive, massive communities online are just insane. I can't believe how people like some of these guys, and this is like all positive to these guys. The guys who've like created their channels around AMC, like have grown hundreds of thousands of subscribers because they only talk about AMC. And like these guys on like YouTube and whatever social media platforms, like they're making tens of thousands of dollars a month, right? Just talking about AMC, which is nuts. I'm like, that is nuts to see that like that's even happening, right? Not to mention they have shares too, so they're making money on the shares, which is like crazy. It's like I'm looking at that stuff and like there's no fighting this stuff. Just leave that alone. Just I wouldn't fight it if I'm a short. If I was looking short, there's opportunity for sure, but let it happen. I would say this week I'm seeing even more people on social media, bigger names than I've been following too, saying, hey, I'm getting in. Screw it, I'm gonna get in. I'll jump in for the ride. So I think that there's no fighting it, and there's gonna be, we should have I mean, we'll see, but unless there's some manipulation, we get some crazy brokerage stuff going on again. I don't know. I think this thing probably goes up pretty substantially this week is my guess, but we'll see. BlackBerry, Microvision will be sleeper squeeze names. Yes, those are two good ones. We can take a look at those two as well. BlackBerry is probably, these are some better traders based off AMC. So if AMC starts pushing up crazy, look to some of these names. BlackBerry, right, went crazy back in end of January. Has been pushing up. So I think BlackBerry with a little dip buy here, I don't know. I think it could be a decent opportunity for this could double. It could double like that. No one would even care if AMC pushes $100, So you can play BlackBerry, and even BlackBerry, if you wanted to go short, long, whatever, right, squeeze. But if AMC pulls back temporarily, then look what happened with BlackBerry. It pulled back pretty massively. So there's opportunity on the short side as well if you wanted to try to go short on something, but you didn't want to play something short like AMC. It's too volatile. Maybe go find something like that. So that I would say those are better shorts than AMC. I just think there's too much focus on that guy to mess with that one short. I would not be doing it if I was super short focused, which I'm not. So NVIS broke out of this 19 area, which is nice. I like that a lot. So I think if NVIS pulls back a little bit come Monday morning, if you can get NVIS sub 20 and momentum stays on these short squeeze stocks, this is a good one as well. You got a lot of resistance to kind of grind through up through 25, but if this pushes over 25, it can go crazy. For me, probably not where I'd be looking. Personally, I would be looking at a backside trade on MVIS. I've done it before. When the dust settles or when I have a better feel, it would be risky as heck, but I would go very small on a short on this. I just probably wouldn't trade it long, just because where it's at, it's not my style of how I want to trade stuff. So maybe go find something else that pulls back, or if MVIS pulls back a lot too, there could be a decent opportunity. But I would be looking for something on a pretty substantial pullback that may correlate to AMC a little bit. So we'll see. All right, let me see. I'm scrolling through the chat really quick. Hit that thumbs up if you guys are tuning in. I appreciate you guys tuning in. That's awesome. Hit the thumbs up. More people in here, more ideas, then that helps. That helps us all. We can talk about SNDL. Let's see. Breakout retest. That's a great pattern to look at as well. LMNL made their run already. I don't know. The thing with LMNL, I botched the day trade on it. I had it. I made a few bucks, but I didn't make that much. I wanted to do better on it. I swung LMNL actually back in here. I remember it was on my list. Someone was asking me about it back in here, and I was like, yeah, I like it going into the PDUFA date, which was like June 4th or whatever it was. The FDA decision that we got that was positive, like approval, right? And so, which comes out Friday. So I was like, hey, this is a solid stock. Got some solid support down here towards like just under $4, from like $4 down to like $3.50. I like it a lot, but it started making a run. I was like, yeah, over 5 or even over like $4.50. I don't know if I like the risk reward. So I had it on my watch list. Perfect example. It dips down. It hits $3.53. Now it's a low float stock, so it was super volatile. I bought it. I ended up getting filled. I want to say like $3.93. So I didn't get a great fill, but immediately the next day, the thing was like over $4.50, or the next 2 days, it was up over almost $5. So I locked in nice, solid gains in like no time on up, just literally because I watched the stock. I was like, hey, why is it down? There's no news. The date is still a couple weeks out. Hey, I'm taking it right here. And it was great. It worked out for a scalp, sort of a swing. And then I got out of it probably back in there over $4.50 because I was like, hey, we're getting closer to the PDUFA date. I don't want to hold it through the PDUFA in case there's bad news. But take a look at the after hours. Thing goes crazy, right? Hits 720. So it held up quite well. This is going to be an interesting one to see how we get there on how it trades Monday. The only problem that I have with some of these things, not a problem, but is going to be the AMC kind of focus, right? If we wake up Monday morning and AMC is back over like $70, right, in a matter of minutes, or come market open, I think it takes away. That's what I was thinking for Bctx back when it had its run. AMC, a lot of the meme stocks were going pretty crazy, so I was like, it might be somewhat taking away from the run some of these biotech plays or some of these news plays could have. So that's kind of like my only concern with a continuation here. I would say let's see how it plays out. It could certainly be the beginning of a bigger move, but on a spike like that, you're trading at 627. If we draw a line into where that's at right now, 627 would put us like right here. So, that's up there. That's pretty, we have some significant resistance up towards $7. Now, we briefly got above that in after hours, but we'd have to get over 7 consistently, and I'd say then we can make a run towards 10, but that might take some time. And I also don't know the details really of what this approval means, like numbers-wise, for the company, which I would want to dive deeper into. Personally, I don't do that because it's just not worth the risk-reward for me up here, so I probably won't even look into it. But if you're interested, it's something that I would look into because that's where you can find the diamond in the rough saying, hey, wait a second, guys, this news is big. This means X revenue. This means X, bottom line. If they can manage their cash or they can manage this influx right after, who knows, then it could be a much larger play. But that's up to your research, which is always fun to do if you want to take the time to do it. You can find some good, you can find some good plays by doing that. It's really not that hard in terms of diving a little bit deeper. Cmrx. See, oh, look at that. Broke out of this downtrend. FDA in July 11 this week. This is an interesting one. This is another one to watch too. Cmrx broke out of the downtrend. I'll write it down as well. Cmrx, because I like that setup. Now, I would say your risk reward here is pretty solid even at the current levels. You got some support down towards like 750. I don't think it comes down that low. Probably $8 would be the lowest you're going to look at. So maybe like you're risking, if you're buying at sub 9, you risk like a dollar or so for, move to 10 plus. 11, even back towards its highs, 1150 going to that PDUFA. This could be a pretty hot, right? This could be pretty hot. So that looks like a solid trader, I would think. Nvos, yes, I will say. Nvos is kind of reminding me of Bctx. It's quiet. They had news. I'll pull it up actually in a second. Oh, sorry. Nvos. It's one that I'm holding. I'm adding into. Quite a bit. Look at this chart. I mean, oh my gosh, it's like primed up. Like this is like, I'll show you why. Okay, let's pull up Finviz. Finviz.com. I'll zoom in a second. Let me just pull it up. Nvos is a great site. I have a link in the description boxes. Just check it out. You can get a free version, paid version. It doesn't matter to you. I use the paid tip ranks, and I just use free Finviz. That's just my take. Either one is. I would probably recommend that going that way if you're going to pay for like a research platform or like a scanner kind of, in a sense. And Finviz is, I guess, more like, user friendly for scanning. And then TipRanks has more like all information in one place, price targets, all that stuff. I mean, they have it here too. But Nvos, low float, right? We're a sub 10 million float, small cap. Look at this, market cap of sub 60 mil. So that's interesting. Now, Bctx was like sub 20 million, which was just, we're sub like 30 million, which is just nuts as it is. But a super tiny market cap, micro cap, you can call it, right? With a float of under 10 million. That's the recipe for those types of 100% runners, right? It could happen. Now, I'm not saying that's what's going to happen. It could happen. Recent news is, here it is. We'll pull this news up. What have we got? Novo Integrated Sciences enters into a share exchange agreement to acquire Ascensia Inc. So that was the news that comes out. All share transactions valued at 14.8 mil, subject to adjustments. Okay, so that was the news that came out. It popped a little bit, didn't really get caught. But this is the type of stuff, I think it's one of those that's building, and it's just sitting super, super low. I love it under 220. I've been buying. And now with Bctx, I haven't rolled like much into anything because stuff was generally up this week. So I'm waiting for like a hard pullback in the market or something like that. And then I would really go heavier into some swings. But in the meantime, if I notice something's dipping a little bit, I'll just grab a little bit here, grab a little bit there. That's kind of how I'm bolstering some of my swings in the meantime. But I like it a lot down here. I mean, the risk reward is really nice, I think. And, hasn't really made a crazy run for a while. When we look at the chart, we have range. I would say targets for me, probably up towards 325, 350 first would be like a solid. I mean, that as it is a lot, but that would be probably where I'm looking at on NVIS. Let's see. Volume increase on Jagx has been significant this past week. How its gains. That's usually a good sign too. When you're watching volume moving, but price action's not. Now Jagx has been pushing up, but if you're ever noticing a stock, for example, like even Nvos, what have we seen in the past? Like if we just zoom in, right? Past couple days, right? The second, the third, and the fourth. What are we seeing? We're generally seeing slightly higher volume than average. Look back. We're roughly averaging 100,000 volume a day, roughly. Go back here, even some days, 39,000. And then we had a couple days where 197,000, 190,000, 127. So a little bit higher volume, and the price hasn't really moved much, which is good. I mean, that's usually a good sign of accumulation. So I'm looking at that as a positive sign for NVOS. But it's one of those patience plays. I have just no idea when they're going to drop, when it will hit. And there's no telling generally, but give it a couple weeks, I think, and we'll probably be looking pretty if pennies stay hot. If not, hey, it might take longer. I might have to hold, or get out of it, step aside for the summer, and then get back in come like, September, October. and look for a swing into the end of the year. GME earnings this week, I don't know. I would probably stay away from that. I would say the focus is going to be AMC personally. BBIG got a lot of attention. That one's an interesting one as well. I think I may have traded it for like a day trade. Yeah, the only problem with it is that it pushed up. It's gotten up to these spikes in the past. So for $5 is pretty significant. It needs to hold over $5 for me to be really excited about it. It's just up a lot. It's not a good risk reward I like right now. Obviously, there's more fundamentally driving, and that's where a lot of people are playing it for, or what they're playing it for. But right now, speaking right now, I don't know if I'm a huge fan of it up here personally. But that's just me. MCS, great swing. They own cinemas. That's an interesting one too as well. Let's see. MCS. Yeah, got lots of range back to the pre-pandemic levels, right? So you still have range from 22. I mean, it's not going to be your penny stock type of 100% like run, right? But generally speaking, if you go from here, or you see if you can snag dips down to $20, maybe up towards like $30, it's still going to offer over 30% upside, which is pretty solid. Sold LMNL half hour before the halt. Well, that's the thing. So what you could have done in that situation, which I understand, if you knew that it was coming, the decision was coming that day, for example, for me, I wouldn't be in. Like, I wouldn't be in. But if I felt confident, or I wanted to throw some lottery money in, I would hold, like, let's just say I had 1,000 shares, right? Let's say you had 1,000 shares. Hold 100 shares, hold 200 shares. Whatever happens, happens. Like, you can go about it that way. Hold 10%, hold 20% of your shares. Just so that worst case scenario, hey, if it goes crazy, you at least made some money, and you don't get the FOMO. If it doesn't, and it gets killed, you don't lose that much. So you could play it that way, which is probably the best way I would go about it personally. Eton FDA date on the 16th, I believe. Let's take a look how this is setting up. Well, after the sell-off, it could be decent. If it holds up roughly here around 6, that could be a decent pickup zone around $6 with range. I mean, you got to probably a couple dollars back to the range that it was. Just be careful with June 16th is coming up faster than you think, so just don't want to be holding it through that in case it gets a pretty hard pull or a hard sell-off. RMED, short squeeze candidate, yes, it is. The only problem, because it's super high short flow, only problem with RMED I have is that it already kind of went for a crazy run. Now it could go again, right? But I don't know. It could come down a lot from where it's at. It was trading sub 3 not that long ago, so that's the only downside here. Be careful. It's a very thin stock. I've traded it before. I've swung it. I've done fine on it short, long, both ways. But be careful because it moves fast, and the last thing you want to be doing is holding this thing, or buying into this thing, thinking that it's going to be a VWAP bounce, and it doesn't bounce on VWAP. Next thing you know, you're buying at $6. Within an hour or two, it's down under 5. That's just it moves that fast. So just know what you're playing it for. If you're playing for a bigger squeeze, then you're playing for a bigger squeeze, and you'll buy some dips, and that's it. But if you're playing it for a short-term play, I wouldn't be buying spikes. I'd be trying to buy as many pullbacks as possible, or waiting for more consolidation, waiting for bottoms, waiting for support to develop, and not trying to time, a bottom, if possible, because it could come down a lot more. Let's see. I held it for 3 months in bad press. Maybe so. That's the thing. If you're holding something, right, and this is how it works, right? This is how this stuff kind of goes, right? It really is. It's so much easier, I found lately, especially on my swings when I've been day trading, because I know, hey, like worst case scenario, I've been consistent for, X number of weeks. Like, hey, I'll go day trade. I know I can roughly make X in a week, right? Or I can be, who knows? Any week could change, right? If you're not staying humble, right? Who knows? You can get slapped. Market's going to slap you, and market will humble you the second you kind of, think you're better than it, right? But, I felt a lot better just holding my swings with my ability to day trade recently, and just kind of making a few bucks here and there makes up for some of the red days on swings. And I've actually done better on super red days in the market. I've actually done better with day trades. I've generally done better with day trades. Long, short, I just kind of have a better feel for things. When there's a lot of scattered action, when scattered price action, when everything's up, it's difficult to try to day trade stuff, because you'll end up be buying tops, and you're getting FOMO'd into stuff when you don't need to be. I found that generally when there's more kind of consolidation onto a couple key stocks for the day, generally, now there's always opportunities anywhere, but when there's generally a couple ones that have a lot of volume, a lot more attention, that's when I've done better focusing on that stuff, or just focusing myself on something else, Bngo is another one as well. I think that's a decent one. It was a prior crazy runner. So those are all high growth plays I think are going to be coming back. So AEI I like a lot too. AEI is beautiful. I mean, look at this. Unfortunately, I missed it. I didn't actually get any, but I was like, it was on my list. It was like next priority on my list to grab for a swing. So if Bctx had run like the week prior, I would have been in AEI. I just didn't grab it. I wanted it sub 4, and I had opportunities early the week, I believe, and then I missed it, and now it hit over 5. So if it comes down sub 450, I would buy it. But you have range in this guy. I think it's a high short float. It's pretty low float stock. You have range gap to fill up towards like 630. I like that. I like that play a lot, actually. But there's less upside from here. Could it go crazy? Yes. But I think there's a little bit less upside from the current levels unless you really get a lot more volume pouring in, which it has been, and you get more of like a squeeze, I guess, on it. Nokia is an interesting one as well. Let's pull up Nokia. How is it done? Let's see. Yeah, well, look at that. Nokia is funny because Nokia is a stock that I'm never one to like come in and be like, hey, I called that, right? But Nokia was a stock, I believe I had a video on 5G. And this is prior to the short squeeze stuff. And it was back in here somewhere, maybe like a month or two before that crazy run. And I was like, hey, this is not a bad idea for the 5G play. And it kind of has been doing well. And you had opportunities to get it sub 4 post, crazy dip. And there's bag holders in this one. So from people who have it up over like $7. But look at that grind up. And and the only problem with Nokia is that it's a massive float. Like it's massive. And float's the amount of shares available to the public. So, sorry, I'm typing in float. I'm literally typing in float in Finviz. I want Nokia. So look at Nokia. They have a 5.37 billion float. So that's how many shares that are available. Now, okay, let's understand that volume is volume, right? And how much volume I've been getting? We're getting, 119 million. So we're not really, volume is increasing for sure, but to move this one substantially, you need a lot of volume. So this is a slower mover. So if you don't like the crazy AMC ups and downs, it might make sense I would grab Nokia, honestly, man. I mean, it's not a bad idea. Post earnings, they made a little jump post earnings, and they've been pushing on up. So I would say it's worth a shot to grab something here if you're looking for more of those squeeze plays, and it's a slower mover. So if you don't like the volatility, that's not a bad idea. AEI pushes 515, easily see 8. I like Tattooed Chef's another one there. I see Tattooed Chef pulling up in the chat. This is one that I like. I have it long. We got resistance right here at 23 though. It's got to get up over 23, and then it's got a grind, but it's a high growth play. I think it's a good longer term play. I have it stashed away. I don't even look at it every day. I'm just in it. That's it. Forward stock is nuts. Ford's been doing quite well lately as well. I just will never buy something this high. Personally, I don't know. People were asking me about it back in here, and it was, great. It worked out, but I wouldn't buy it up here personally. That's just me. But they have a lot, the electric F-150. They got new Maverick. Hey, there's room here, but Ford is just, the float's pretty big, pretty massive on that one too. So I just personally am not a huge fan of that, but or buying something that's straight up like that. Cup of handle on VISL. Are you? Yes, I know. VISL is setting up. I like VISL a lot. It broke out of the downtrend too, kind of. If you look at it, I guess I have my line looking at VISL, but my look at this is roughly right. Rough downtrend break. It's 3 blocks is coming very soon, I think. And then after 3, we'll see what happens. But it's one that I'm just kind of buy dips, sell rips, or just sell covered calls out on it. If we get a really good day on VISL, if we get a good day and the thing is pushing $3 again, those options for October are going to be interesting because you're talking $5 calls for October are looking at you're talking 40 cents right now. Those might go $1, if that thing spikes hard one day. Those could go to $1. I would say, hey, if VISL hits like $3 and I can sell $5 covered calls for October, I would literally just say, okay, take half my shares. I would, whatever amount of shares I got, I would even buy more at the time and just sell a bunch of covered calls at $5 and say, hey, take half. Right now, I think it could go, it's possible to go further depending on how this next couple months plays out, but that's intriguing for sure. Tel was a fun one this past week a couple times. I think I traded a couple times. A little overextended here, but up towards, I think it's probably got room to like $6 or $7 probably. I haven't looked deeper into it, but they got some good news. I was liking the news I was seeing, so it's probably not a bad one to buy dips. If it comes back down sub 4, it's probably a decent shot, I think. Eyes is one that I have on my list for swings as well. I can pull up Eyes. Yeah, I mean, well, it popped on Friday a little bit, but if Eyes comes back down sub 6, I mean, I like Eyes a lot, and it's a prior crazy runner too. I like it under $6. So we'll see if we can get it, but Tel needs one more contract to start pre-construction build out. Okay, well, let's see. ATIX. I've been seeing that name popping up a couple times. What do we got on ATIX? Is it like an OTC? If it's an OTC, I don't trade OTCs personally, but maybe someone else, if you're interested in looking into it, take a peek into it. IMTE is an interesting one. I think I was on my list, or I was looking at this. It got a good pop on Friday up to 575. So if you can buy IMTE sub, I mean, honestly, as close to $4 or even under 4 as possible, that's a better buy in my view. Under 5 is probably okay, but I would, if it was my style of swing trading, I would want to have an average as close to 4 or under 4 as possible on this one. And I would, I'd look into what's going on behind the scenes, maybe have some more due diligence done and more of a longer term approach on it. But I think with the spikes this thing has had, and the flow is probably small, right? For those types of spikes, it's got to have a low float. We're looking at 3 million float, 37 million market cap, yeah. That's a spike. This is a spike play, a pure spike play that you want to buy as low as possible, and just be chilling on it. Set some sells 25, 30, 50% higher than where you're at. And you can just wake up to like those hitting one day, or just randomly they'll hit. With some of these low floats, a lot of them end up running. BCLI is another one that I have heard quite a bit about, and it is like mega oversold, like on the daily. Although it's been grinding up, but this is an interesting one. I want to look a little bit deeper into it. I'll put it on the list, because I have heard enough people talking about it, or I've seen enough chatter on it on social media for me to be interested. So I kind of like that. But then again, I don't like when there's a lot of chatter. Okay, this will bring me back into AMC. Then I'll kind of wrap things up from here. Hopefully, I don't want to keep it too. I want to make sure it's not too long, so somebody can come in after the fact and like watch this and get a bunch of ideas, and watch it like tonight, tomorrow, right? So I don't want to make these streams like too long where it's like, oh my gosh, I'm never going to watch that like after the fact. Okay, this brings me into like AMC again, because the whole idea of like when everyone's looking one way, look the other way. This is, I think, an exception to the rule here, because I'll pull up Finviz as well, because I'm just seeing too much. I think that there is too much of a coordinated effort among retail traders right now, and I'm thinking that there's more than retail in this stock as well, to go after this thing. Now, sorry if that made a sound. 22% short. People talking about the naked shorts in this thing and whatnot. I think that there is a lot of rotation in and out shorts for more, I guess, retail. There are probably some bigger funds that are just shorting this thing, but like what I said earlier was there's a good chance that some of these funds who are maybe taking shorts up here, what they're doing is they're throwing a line in the water, and it's not a big line, right? It's not a heavy position. They're just throwing a line in the water. Let's just see if I can grab it, right? And if AMC comes down from like $50 and it comes to like $20 in a couple of weeks, or in a short period of time, cover your short, make your money, right? But they're also thinking to themselves, hey, if this thing goes 100, 200, 300, we have ammo and we have backup, right? So we have the ability to add to our short. So really, in my view for AMC, the way that you really have to squeeze the stubborn shorts who are going to do that, I think you really have to get this thing over 100, 200, and it has to start going. If you get that, then I think you're going to have like massive bailouts would have to happen for a lot of these firms and funds again, if they're stubborn enough to continue to stay short. I think if I was them, there's a million other opportunities, and there's so many better places to be. So really, there just are, right? But if they have to do it, they have to do it. So we'll see how this plays out. It's a battle with the amount of retail that's coming in, and I'm seeing more people talking about how they want to jump in this weekend. Come this week, I think that we're going to see even a bigger push. And if Monday we open up and we're going 50, 60, 70, I think it's going to be $100 easy. And then depending on how we handle 100, do we get a hard pullback at 100, or does this thing rip through 100 and just go? Then we're looking at a lot more. I mean, we started to go parabolic, but I think we can see even more parabolic. Now, here's the comparison though. AMC to GME, right? Okay, so GameStop was down here under $20, and then it pushed up, held up in that 38 range for a couple of days, about a week, right? So that's kind of where we're at. We're like in that range, right around $40, roughly for AMC. Then eventually it went parabolic further. Here's the difference. Now, the float on GME is 57 million. Okay, that's how many shares are available to trade. 57 million. You go to AMC, what are we looking at for AMC? 417 million. Okay, so that's the difference. So you really need a much more focused effort to kind of tie up these shares. Now, for a good period of time, it was cheap enough that it didn't matter, right? The stock was a $10 stock, and so those who were just grabbing shares, right, you're tightening up the float. If you're grabbing shares and you're not going to trade them or sell them, you're just tightening up that float because there's less shares available, or in active circulation, I guess technically, right? But as the stock gets higher, you need more volume, more attention, more of an effort. Because if you get more of that effort, right, that makes a larger float than GameStop. As the price gets up towards those levels, it makes it doable. So that's the only thing. You need a much more coordinated effort, which I think we have. And I'm not the AMC ape guy by any means. I'm just looking at this saying, I think that there's a lot more to go here. Personally, could it literally end this week, and could this thing get hammered down to like $20? Yeah. And I mean, I understand that risk on my position, but I don't think that's going to happen. It might take more time, but I don't think that's going to happen. So we'll see how it plays out. We'll see. Let's see. AMC isn't GME, won't happen, but I could be wrong. That's my thought process. GME was over 500 pre-market one day. Yeah, I mean, we'll see what happens. But, I mean, I'm just thinking that I think people learn from the GameStop thing, saying, hey, like, guys, like, if we just really focus on one stock more, and I think that was also done for GameStop, but I think there's, to a degree, there's a little more oomph behind this AMC kind of push. Hey, if like everyone actually does this, like this will actually go crazy. Like this will go hundreds of dollars. Now the $100,000 price target and all that stuff I've been seeing is like just stupid, I think. But it's possible. I mean, it's possible that we get to like some crazy numbers up over $100, $200 briefly. The size of the float is just the only difference for me. That's like, okay, I don't know. That's just the only like difference in terms of this to GME, and as the price gets higher, that gets a little more challenging to kind of really, unless people are really not selling, which it is not going to happen. People are going to sell. Maybe you can try all you want to stop people from selling, but people are going to sell. So with that, I'm going to wrap things up. Appreciate you guys for tuning in. Hit that thumbs up button. If you are new here, consider subscribing. We do these every single Sunday. Today, I know I did it a little bit earlier than I wanted to, but usually it's like 8 p.m. Eastern. But I got some stuff I got to take care of, so I had to wrap it up. But on top of this, Wednesday morning market open time, come back. We're going live again, live tradings. So if you want, those are fun I talk through a bunch of stocks I'm either in or I'm day trading live, like at the time, and we did that on Wednesday, which was a lot of fun. So we'll see how that plays out this week. We do that Wednesdays, and we go live on Thursday. So appreciate you guys for tuning in. Stay tuned. If you want to check out yesterday's video, go ahead and do so. I go over all the stocks I'm currently holding and how I fared the past week. On the 100K challenge, taking the account from 15 to 100,000. The goal is a year. We're coming up on a couple months till the end of that challenge, and we're at 51,000 from starting at 15. So we got to essentially double the account from here, which is doable, But, we're going to need a pretty hot market. We're going to need to, really kind of fire on all cylinders. So who knows? If AMC goes to like $500, maybe that gets us there. Like, it gets us a good chunk of the way. So we'll see. I appreciate you guys for tuning in. I will see you in the next one. Hit that thumbs up button. Peace.